We have C. Vijay Kumar, CEO and MD, as well as Prateek Agarwal, the CFO at HCL Technologies, joining us. Thank you so much for taking time out. Mr. Vijay Kumar, let's begin with you because you sounded rather optimistic in your press conference last week. Has the discretionary demand environment changed, according to you?
The discretionary environment has remained the same. It's not changed in any way. We delivered a reasonably good quarter. We delivered a 5.6% year-on-year growth. It was a seasonal quarter, so there is a sequential decline of 1.6% on constant currency. And based on the good bookings that we've done, we did about $2 billion of booking. That gives us confidence going into the next quarter. Because in Q4 we did a 2.3 billion, Q1 we did 2 billion booking. So we expect all the verticals and geographies except financial services to sequentially grow in Q2. And we remain confident of meeting our overall guidance for the year, which is 3 to 5% constant currency growth.
Then what exactly is giving you optimism to say that all verticals and geographies, barring BFSI, will continue to grow second quarter onwards?
Yeah. So basically, Q1 has been a declining quarter for us, and we have a forecast for Q2. And it's really based on the pipeline, as well as, more importantly, the bookings that we've done in the last 2 quarters. The execution of that is on track, and some of that will reflect in the revenues in Q2. And that's the confidence. It's not really any major change in the environment. It's similar programs. A number of small deals and large deals are part of the booking, and all of them kind of at some point gets converted to revenue, and that's all built into our forecast.
Right. Prateek, so Street is not convinced that you will meet the margin guidance as there will be further headwinds of acquisition and wage hikes in coming quarters. Would you like to clarify on that?
Sure thing, of course. I think even if you see our previous 2 years and the inter-quarter sort of trajectory, we are pretty much on the same trajectory this year in FY25. The Q1 has typically been our weakest margin quarter with the top line impacts, which have also been seasonal in that sense. And Q1, even in the previous 2 years, has been around that 17%, which is where we landed up this quarter as well. Typically, the second quarter picks up to, something like 18%, and the third quarter is the peak, which goes 19% plus. And then the fourth quarter again comes back to that same second quarter type of level. So that has been the trajectory last couple of years, and we expect the same trajectory to play out this year as well.
On the revenue guidance matter, issue is the Street is convinced that you will be able to beat it, given that you haven't built in acquisition uptick or change in discretionary demand in your guidance so far. Would you concur with that assessment?
I will stay with the range and not want to guide, which end of the range at this point in time. I think we have painted a certain forecast for FY25, and the first quarter has already happened. It's been a slightly better than what we expected kind of a quarter, 0.4 better, 1.6 versus -2 that we had pointed out. It is not a number which sort of really changes my guidance on a full year basis. We'll wait for at least Q2 to see where we are and then see if we need to fine tune the guidance.
So, Mr. Vijay Kumar, the deal wins have been rather soft. Is it just a timing issue? Is there a leakage in the deal funnel? What would you attribute it to?
Yeah, I think in Q4, we clocked in 2.3 billion. So this quarter, we clocked in 2 billion. 2 billion has been our booking run rate. If you take a last, whatever, 12, 13 quarter average, it would be in that neighborhood. We would ideally like this booking number to go up, and even in this quarter, we were expecting a couple of client contracts to get signed, but which spilled over into the July, August time frames. So we expect a good booking overall in this year based on the pipeline that we have. It's very difficult to kind of give you a quarterly view of that.
Prateek, the ASAP acquisition scale has been lower than expected. How do you see it contributing going forward, and what about the HPE acquisition?
Yeah, so ASAP, I think, has been pretty much as per plan. There is a very good complementarity between the auto engineering capabilities that we had and what they bring to the table. So I think it's developing in the right direction. This quarter was a minor blip, so that affected us a little bit. But I think that doesn't alter the rationale and the strategic element of that acquisition. I think it's playing out as expected. No major deviation. As far as the HPE CSS assets are concerned, that is something we expect to take about 6 to 9 months, maybe more like 6 months now, because it's already been, I think, about a month plus that we announced. So as and when that closes, we will be starting to publish the data on that from then. We haven't really called out because it is a asset carve out. It is not a entity buy or there are various types of acquisition. It brings us a solid set of 20 of the largest 30 clients across the telecom sector across the globe, and especially in Europe and Japan, where we didn't have that kind of hunting ground.
CVK, Gen AI, that particular part, give us some more details, the quantum of pipeline on the AI part, types of orders which are brewing in. What are the conversation ratio of pilot projects which you are having with your key clients?
Definitely, there is a lot of activity in Gen AI space with a lot of client conversations and a lot of work. It's very, very buoyant at this time. Pretty much every client we have something on Gen AI going on, and many of them are still in proof of concept. Some of them have moved into a defined program. It's still not an enterprise-wide program, but it's defined for a certain area. And I indicated that we've signed a couple of deals where the TCV is in the double-digit $1 million. So it's slowly picking up, but the lot of spend in this area is going to happen in the surrounding areas like the data and cloud and cognitive infrastructure, and those are the type of spend areas that we are targeting, which are all surrounding Gen AI, which will make Gen AI very effective at an enterprise level.
All right, gentlemen, thank you so much for taking time out and joining in, giving us a view on HCL Technologies and the quarterly performance. Good order bookings expected for FY25, and we'll wait for Q2 to review the revenue guidance.
If you like this video, then like, share and subscribe to ET Now.